Welcome to Expert Trade Ideas' step-by-step guide on how to day trade using a 15-minute and 5-minute chart setup to identify, enter, and manage trades. In this video, we'll walk you through a simple 10-point checklist that will help you trade confidently and systematically. Let's dive in. First, we start with the 15-minute chart. This is where you'll analyze the overall trend and identify key levels for potential trades. Here's how. Analyze the trend. Look at the 4, 8, and 12 exponential moving averages. A bullish trend will have these EMAs stacked upward, 4 above 8 and 8 above 12. For bearish trends, they'll be stacked downward. Check the 200 simple moving average for long-term trend bias. If the price is above it, you're in a bullish environment. If it's below, the bias is bearish. 2. Mark key levels. Use Camarilla pivots to identify potential support and resistance zones, while pay attention to the pivot and S1 to S3 and R1 to R3 levels and highlight them on your chart. Highlight pre-market highs and lows for additional support resistance zones based on the highest 2 above average volume bars and their related candles' highs and lows. 3. Confirm volume momentum and institutional activity. Look for rising volume, especially near key levels like pivots or trend lines. Pay attention to large dark pool prints. These can signal where institutional activity is concentrated. Check RSI. You want it above 50 for bullish setups or below 50 for bearish setups. If RSI is above 70 or below 30, consider waiting for a clearer signal. For day traders, analyzing dark pool prints focuses on more immediate institutional activity to anticipate intraday price movements. Here's how to adapt the context. Dark pool prints. Over what period for day traders? 1. Same day or last trading day. Recent large prints from the current session or the previous trading day are the most actionable. These provide real-time insights into institutional positioning and intent for intraday moves. 2. Last week. Review significant prints from the prior week for context on major support resistance zones or areas where institutions previously accumulated or distributed. This helps align intraday trades with broader market activity. Institutional behavior and its context for day traders. 1. Accumulation intraday. Large prints near intraday support zones can signal institutions accumulating for a bullish move. Confirm with price bouncing off these levels with rising volume and EMAs turning bullish. 2. Distribution intraday. Large prints near resistance or during a price rally can indicate institutional selling. Look for price stalling or reversing near these levels, with bearish candlestick patterns forming. 3. Fake outs around key levels. Institutions may create false breakouts or breakdowns to manipulate retail traders before moving the price decisively in their intended direction. Monitor how price reacts to these levels on the 5-minute chart for entry confirmation. Using dark pool prints with intraday indicators. 1. Volume confirmation. Rising volume with large prints near key pivot levels like Camarilla S3, S4, R3, R4 confirms institutional intent. Watch for prints near predetermined levels that align with your 15-minute or 5-minute setup. 2. EMA and momentum alignment. Bullish move. If large prints occur near support and EMAs 4, 8, 12 are stacked bullishly, look for long opportunities. Bearish move. Large prints near resistance with EMAs stacked downward favor short trades. 3. Camarilla pivot levels as a gauge. Large prints at or near Camarilla S3, S4 indicate potential support and buying interest. Large prints near R3, R4 suggest resistance and possible selling pressure. 4. RSI validation. Use RSI to confirm institutional direction. Rising RSI above 50 supports a bullish bias. Falling RSI below 50 supports a bearish bias. 5. Timing the reaction. Use the 15-minute chart for trend confirmation and the 5-minute chart for precision entries at or near levels of large prints. Practical example for day traders. Scenario 1. Bullish. Large print detected near S3 during pre-market or intraday. Price stabilizes at this level and volume increases as EMAs align bullishly. Entry. Wait for a bullish breakout candle on the 5-minute chart with RSI rising above 50. Stop loss below S3. Dependent on your trading plan, you may choose tighter stop losses. Target R3 or intraday resistance. Scenario 2. Bearish. Large print detected near R3 during the open session. price struggles to break above R3, forming bearish reversal patterns. Entries short on breakdown of the 5-minute low after rejection at R3. Stop loss above R3. Dependent on your trading plan, you may choose tighter stop losses. Target S3 or intraday support. By focusing on same-day or recent dark pool activity, day traders can align with institutional moves and increase the precision of their entries and exits. Pair this analysis with volume, EMA alignment, RSI momentum, and Camarilla pivots for an actionable intraday trading strategy. Once you've analyzed the trend and marked your key levels, it's time to look for a trade setup. Number 4. Find price action signals. Watch how price reacts around your marked levels. Look for patterns like bullish or bearish engulfing candles or pin bars that show rejection. Ensure the setup aligns with the overall trend. For example, if the trend is bullish, focus on setups near support levels like S3 or the 4 EMA. For 5, wait for confirmation. A strong trigger candle on the 15-minute chart is your go-ahead signal. This could be a breakout above resistance or a bounce from support with rising volume. Now, we shift to the 5-minute chart to refine your entry point. 6. Pinpoint the entry. On the 5-minute chart, look for pullbacks to the 4 EMA or a clear continuation pattern near your identified levels. Use this smaller time frame to confirm the strength of the move before entering. 7. Verify volume and RSI again. Make sure volume is increasing during the pullback or breakout. Check that RSI is moving in the same direction as your trade. A rising RSI supports a long trade, while a falling RSI supports a short trade. Once you've entered the trade, managing it effectively is crucial. 8. Set your stop loss and target. Place your stop loss just below the nearest support level for a long trade, or above the nearest resistance level for a short trade. Use the Camarilla pivots or 1x ATR as a guide for setting your profit target. 9. Trail your stop loss. As price moves in your favor, adjust your stop loss to break even to minimize risk. Continue trailing your stop below the 8 EMA for long trades or above it for shorts. 10. Exit strategically. Watch for signs of weakening momentum, like declining volume or RSI divergence. Exit if price closes below the 8 EMA on the 5-minute chart for a long trade or above it for a short trade. And there you have it, a straightforward 10-point checklist for finding, entering, and managing trades. By combining the 15-minute chart for trend and setup with the 5-minute chart for precise entries and exits, you'll trade with more confidence and discipline. Remember, trading is about consistency and patience. Stick to your process, and over time, you'll see results. Happy trading, and don't forget to like, subscribe, and share for more trading tips. Thanks for watching. If you have questions, drop them in the comments below, and we'll be happy to help. See you in the next video.